This should be on our website. You can find out about this. So this is a Canadian chart. This is the chart of Canadian assets reflecting Canadian and U.S. tax consequences upon leaving Canada. All right. I'm talking about a simplified form for you guys where you can see how things will be on the Canadian side, how the U.S. side is going to tax you, and then if there's any withholding, and then what are tax planning opportunities. So quickly, this is one of the things that we've worked on. Again, trying to help out fellow Canadians who are moving to the United States, help them with tax planning, help them to simplify taxes, to report and simplify reporting, and then to make this manageable, right? And this is overwhelming. I cannot stress this enough. This is the first year it gets overwhelming. It becomes stressful. You don't want, if you cannot do this on your own, don't do it. If you miss reporting, there are huge penalties. Understand what needs to be reported. Make sure you do understand what needs to be reported, because I've seen a lot of cases. So Canadians are DIY people, right? I mean, they want to do it, themselves. And I get that on the forms, instructions from the CRA are easier to understand. But that is not true on the US side. Forms are complex, instructions are complex, and then not many people can really help you. That's the truth. So make sure you get some professional if you cannot do this on your own. First year will be complex. Once you get through the first year, things will get easier. Plan, and that's the whole point here, right? So, and that's the reason we are doing this. So I want to make sure that you get enough information to simplify your reporting, to be able to understand, and then make better moves. That's the idea. Making better moves where you can help yourself. I don't want you to be stuck in a position where you're continuously relying on a cross-border professional to help you. There are not that many out there, and then if you get stuck, it is a problem. The fees, the professional fees are huge. On top of that, we have additional taxation, additional reporting. I don't want that mess. I want things to be simple for me. And then, so if I want things simple for me, I want the same for you. Keep cross-border tax simple and manageable. This will be my number one advice. So let's go through the chart. So Canadian RSPs, again, no tax consequences, not allowed to contribute after you leave. There is, of course, U.S. taxes. We're talking about, we're talking about the federal level. There's no issue because of the U.S.-Canada treaty, but some states do not recognize tax treaties, and then so their income that's going to be taxed in those states. Are you required to close this account? No. I mean, if you are going to keep it, keep it. If you do take out money and before it becomes a RIF, then of course there's a 25% tax according to U.S.-Canada tax treaty that you have to pay on the lump sum. So tax planning opportunity. Before you leave, maximize. Put as much as you can based on your income that year. I don't want you to just say, hey, I have 100,000, I'm going to put 100,000. Don't do that. Put what you need. That means put what you need according to your income that year. All right. And then make sure that you maximize that account before you leave. Just Canada tax treaty, not required to close. Of course, you cannot close. It's a locked-in account. You can unlock it after 2 years. Once you have become a non-resident for 2 years, you have to be a non-resident. And then, of course, you can take the money out. Again, tax planning is, 2 years unlocked after being a non-resident of Canada. So let's move to these retirement accounts. The same thing again. Same issues. I'm not going to touch on them. They're all covered. TFSA again, it's a gray area account. Gray. This is TFSA. It's a gray area. No tax consequences, but that doesn't mean nothing really happens on the U.S. side. TFIC rules. Everything gets taxed. Everything needs to be reported. If I can, I will close this account. And then, so this is what I would do. You're not required to close, but we will recommend closing it. Tax planning, again, same thing we're saying. Make sure you do close it. So FHSA I've already covered. FHSA is again, this is no tax consequences. Investment income is taxable in the U.S. You're not required to close. Again, if you do withdraw the money, 25% withholding, we will recommend closing this account. RESP, No tax consequences on the Canadian side. If you do move, investments in investment income and government contribution are taxable in the U.S. You're not required to close. If the amount is small, just close them. If you 25% tax on withdrawal, return of the government grant if the beneficiary is a non-resident. So these are things that you have to look out for. Planning is available. Consult a tax professional advisor. So HBP and LLP, you have to pay this money back once you move from Canada. Of course, the accounts get closed once you move, so there is no tax consequence on the U.S. side. You are required to close these accounts. Again, 000. Canadian pension plan, OAS. I mean, you make sure you update the CRA that you're no longer there. So, no taxable withholding. If you are moving to U.S., everything gets taxed in the U.S. Nothing on the Canadian side. Non-insured account. Yes, there is dim disposition. Again, I've covered this in detail, what really means. Income is taxable on the U.S. side. Short-term, long-term capital gain rates apply. So we do have different rates on the U.S. side on short-term and long-term. We will recommend closing this account. I would say before you move, close this account if you can. Again, Canadian ESO, RSUs, complicated areas. Talk to a professional. Once you have them, make sure you understand how the rules are going to work. Even if you move, if you have ESO and RSUs, and then things get vested or you exercise your stock options, then there will be a T4. That means Canadian reporting will be required. Things will be reported on the U.S. side too, and then there might be double withholding. So again, talk to a tax professional to help you with the ESUs, RSU, and then the shares of the corporation too, right? Make sure this is all planned. Primary residence, no tax. You can get the advantage of the capital gain exemption for your primary home. I will make sure I do that, on final return. If you're converting this into a rental property, then again, non-resident rental rules apply, which means tax withholding on the rental income. That's true on the rental property too. There is no deemed disposition on the Canadian real estate. That means any real estate that you own on the Canadian side or in Canadian soil is not subject to deemed disposition. But if you own real estate outside of Canada, those are all subjected to deemed disposition. If you do sell these properties after you have moved, we have other rules that kick in. Talk to a professional because there's timing issues. Certain forms need to be filed within a certain time. CRA is going to withhold your money. This needs to be planned out. This is what I'm getting to, because I want this to be limited. I've seen cases where somebody will sell a house, let's say, for example, in January. Nowadays, with the CRA and the way things are, it takes about the whole process. By the time you sell your house and you get your money back, it's like 12 months. In some cases, 11 months. In some cases, even longer. So, and then again, I will try to shorten that time. And how can you shorten that time? By planning. Make sure you understand what are real times happening on the CRA side. How long is they're taking to process the T2201 forms. I mean, these are capital gains form for a non-resident selling a Canadian property. All right, so these are the things that I wanted to go on with you, and then so the real estate is only limited to the Canadian side. Non-Canadian properties again are subjected to deemed disposition. If I have not covered anything on these lists, make sure you send us an email, info@akifcpa.com, and then we'll gladly help you. Of course, this is all general. If you have specific tax situation and you want to talk to us, send us an email too. I will be gladly get on call. Do a consultation too, and then really plan with you, help you simplify this. So there will be a tax checklist that will be put up on our website that you can download for Canadians who are moving to US, for you to go through some, majority of the items that you should be looking at, you should be working on while when you move or you have moved. Look at things where you should have worked on if you've already moved. And then any other questions, again, email us info@akifcpa.com, and we'll help you. Thank you very much.